Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Merrion.
Thank you so much for joining us today. Jim's going to get right into our national news.
Yeah, thanks, Anthony. The whole theme for today is really massive recovery, and the dichotomy of the real estate space compared to the overall economy. Because, it's not just Colorado. From what we can tell nationally, it's gangbusters for real estate nationally, way in defiance of, the hurt that people are seeing in other aspects of the economy. So, Realtor.com has been, doing this housing market recovery index, with 100% as the baseline, and they've reached a 103.7 nationwide for the week ending July 25th. So it was a pretty large increase over last week, 2.7 points, and brought the index 3.7% above the pre-COVID baseline. And the pre-COVID baseline was very healthy. We were looking at a very good 2020 as we we're rolling into early March before everything happened. And regionally, the West and Northeast continue to lead the recovery. Not a shocker, California was hard hit early on. New York was hard hit. New Jersey, Connecticut, all those places are now really starting to see a massive upswing in activity. And 30 of the 50 largest markets in the country are now above that recovery benchmark. And, New York, being just so shut down, this is where it's inevitable that they'd be at the top of the list. Boston is a little surprising to me because they have, I think, the highest unemployment rate of any metro area in the country right now. But they're showing a massive recovery as well. So it kind of shows that illustration of defiance of the housing market in the face of other aspects of the economy. And then, with tourism starting to come back to places like Las Vegas, we're seeing that. And, Philadelphia and Seattle are strong as well. And if you would slide that over to the next slide, Anthony, the national inventory, is continuing to be this a bit of an anchor on the whole market for us. I kind of reflect on what our market would look like if we had the inventory to satisfy everybody, because as every deal we put under contract goes under contract, I have other buyers who are either frustrated and deciding to wait because the inventory is so low with what they're looking for, or we're in a nonstop battle trying to get other deals done. And so our inventory has declined year over year by close to 33%. It's almost a third drop in our inventory nationally. And, inventory in large markets is even a little bit more than that, closer to 35%. And, nationally, we're seeing just, from the past year, a 13.4% drop nationally in inventory of new listed properties. And the median price now in July is $349,000 nationally, which is up 8.5% year over year. And even in the larger markets, it's up about 8%. And, we really are pretty much seeing the same time on market. We have not had good inventory for, several years nationwide. So that time on market is very short. It takes about, 30 to 45 days to close a property. And we're seeing the home, most homes spend, 60 days on average on the market. So very, much a seller's market. It's continuing to be so. And with the lack of inventory going forward, I think that trend is going to continue.
Absolutely. And I really think that during COVID, what it's really shown people is just the amount that they're putting into their home, not just because they're remodeling a lot or they're moving, but just the value of the home to the individual is really driving a lot of this market. And it's amazing to see that. Just in a median, the fact that it could go up 8.5% in 1 year, that's about double the national average. So it's just pretty incredible to see.
Yeah, it is. It's quite large. And our friends over at Showing Time, they always publish their Showing Time index that looks at what the future essentially is going to be, because this is a prognostication essentially of what our activity about 90 days out is going to look like. And I mean, if you're an agent in this business and you're seeing that showing activity in July was up 60.7% nationwide, and if you're an agent in New York City who had the worst spring of their lives and seeing that showing activity is up 76.6%, it's going to be a very, very strong fall. You and I are going to talk a little bit about, what the start of the school year impact is coming up in a little bit but I think, this just shows a really strong trend that we've got a lot of wind in the sail for real estate going into the fall market. And I think we're going to continue to see just this recovery really launch, for the next few months at least.
Absolutely. It's a little bit hard to say what's going to happen nationally as far as where we're going to land versus last year at the end of all of this. But in Colorado, I definitely am very optimistic, and we'll talk a little bit about that.
Well, you're just an optimistic person, Anthony.
That's true. That's why you have me around.
So who are we, Anthony? Let's do a
Well,
little shameless self promotion here.
same as Shelf Promotion, yes. I'm Anthony Meisner. I work out of Boulder at Land Title, and my cell phone number is 303-968-9868. You can always shoot me an email as well at ameisner@ltgc.com. I'm just your local stats expert, so this is what we do.
And I'm Jim Merrion. I'm the pretty face. I'm a real estate realtor here in Boulder, Colorado, 303-548-0243. And you can always shoot me an email at jim@ourcoloradohomes.com. And just remember that, every month when we come at you live with these podcasts, we always start out with a big picture of the national news and then start to get a little more granular with information about Colorado before we dive into the local Front Range market itself.
And every single time you can always catch us on the show at frontrangefacts@gmail.com if you want to see any of our information or you want a copy of our slide deck or you just have more or you want more information about some of the local market areas. We're definitely happy to help with that as well. And don't forget to check out our other podcast. Jim and I also run Get Real with Blockchain, and you can catch us there to talk about everything from cryptocurrency to blockchain technologies that are affecting real estate.
So yeah, let's look at the Colorado specific, Anthony, for a little bit now here, and this is kind of a big number to wrap my head around. I mean, over 10,000 sales in July, just statewide. Yeah, that's big.
Yeah, 21% more than last month big in a market that seasonally we are always going down.
Yeah, I always say that, July is kind of like the last hurrah in a typical year of things, but to even see this massive jump of, close to 16% more over June and, 21% from this time last year. So we were at about, a little over 8,000 sales in July last year statewide, and to see now pushing 11,000 is just nuts.
It is. And look at that next number. Median home prices are at 443,000 and they ticked up 4.5% in 1 month.
Yeah. It's nuts. And just, too, I mean, just, the fact that, prices have essentially risen 8.6% in July of this year over July of last year
Despite COVID, right? That's pretty impressive.
You and I both said when COVID hit that the market fundamentals are very strong. We expect to see very solid numbers continue to come from Colorado regardless of the shutdown.
But who would have known?
I don't think either of us would have said, hey, there's going to be, close to 9% increase in prices between July of last year and July of this year when we went into it. It just, I think, we were pretty smart about our prognostication, but this is nuts. It's just crazy. So
it is.
Yeah.
Better than anyone could have ever hoped for, right? I mean, real estate really is going to drag this country out of a recession.
We try every day. We wake up with that mission.
Single-handedly on our back.
We carry the country. So, our active listings, which is obviously playing a role in that price increase, down 11% from June and 42% drop from this time last year. We knew going into this year that the inventory levels were not good. They were at a historic low. And then, we had 34% of all listings drop off the market overnight, essentially in March when the shutdown happened. And we've started to see it trickle back in, but to see that we're down 42% in listings from July of this year compared to July of last year, that's driving a lot of that price increase, and that's something we couldn't predict. When we were talking at the beginning, in mid-March about where things were headed. It's just that drop off in sales has been, or drop off in listings has been quite a bit more than I would have ever imagined.
Absolutely. I mean, just the fact that Denver Metro hit a record high of over 600,000 for the first time ever in a July. And, that's almost 8% over last month. So it is pretty interesting. And it is good to see that the depth of the market is coming back, right? In past episodes, we've talked about how certain areas of the market, especially luxury, were a little stale and stagnant, and it is just not the case anymore. I mean, the entire market is firing on all cylinders.
Yeah, and it just, I think it must have been just only 2 years ago. I remember reading the Denver Post one day about how the average sale price had broken 500,000, in the Denver metro area, and here we are now breaking $600,000.
A lot of money for a house. It's getting very unaffordable here.
Yeah, it is. that's a whole nother issue, obviously. But from a short-term perspective, it's a great way to recover, out of something like this. But long-term, it's certainly going to be an anchor on certain aspects.
Absolutely. So this is the slide that Jim was talking about earlier. We wanted to talk a little bit more. Showing Time came up with this index to really measure kind of how COVID was affecting showings in the marketplace. And so we can really take a look from the very beginning in January, and we're kind of judging these lines and basing showing traffic off of what we saw last year versus this year. And so right in the middle there, you can really see just the dip during COVID when we weren't really allowed to show property for a few weeks, and just fear, and people didn't want to have people in their houses, and kind of everything that came out of COVID. And then you can really just see coming into May there, this just really strong recovery, right? And what's really kind of shocked everyone is just how far above a year ago we were in showings. And it's kind of interesting to see because we've been trending about 12% more than we were for all of July and most of August, above our normal mark. And the other thing, it's not just about the number of showings, but it's just about the kind of seriousness of people looking in the marketplace, right? People aren't going out and looking at 20 homes and be like, I don't really want anything. That's what they would do in years past, right? If there was not a lot on the market, they might go out over and over and over again to try to find a house because they're looking for the perfect thing. There's not a lot of inventory. And right now, I mean, you're really seeing the number of offers per showing is just way higher than in the past.
Yeah.
So it is really interesting. The last little tidbit there, look at that nice little drop off that we see towards August. I mean, it's pretty obvious to see the start of school here and just people taking a little bit of break from just the crazy frenzy that they were in. Not that they're not looking at homes, but it's much more close to a traditional level where we would have seen last year.
Well, and this is the conundrum, or the big question mark, I think, on the market that you and I were discussing a little bit before we started the podcast today, which is, we live in a different world than in 2019 at this time, right? For both, it's not surprising to see activity drop off the first week of school, but the question becomes, what effect does having your kids at home during the school day, and you and your significant other at home doing work from home all day, what kind of impact does that play in showing activity going forward? Is it going to make showings more difficult? Are we going to be seeing a shift in the market where showings happen only after school hours, to accommodate the kids not being interrupted during their important classwork? So all these things I think are big unknowns and uncertainties in our market going forward, and it may have a negative impact on the recovery somewhat coming into this fall market. It may not be, it may take some of the wind out of the sails because it may slow things down. I don't know. It's a good question to be asking, I would say.
Yeah. And the other part of that too is just think about just how much more people are having to put in their time to helping their kids with school. If you were able to go shopping before and now you're stuck, a couple hours a day trying to help your kids with school, you're still trying to catch up with work and get all your stuff done. You may just not have the energy to house shop at the end of the day, right? That
Yeah.
free time that you might have had before is probably a lot less than in the past.
Yeah, and what having been in the industry, showing homes as long as I have, there's certainly kind of an ebb and flow of when you're looking at homes. Sometimes you notice that more homes are vacant than when you're showing them, and other times they're more occupied. For example, prior to COVID hitting, I'd say the last 2 years, I was seeing, more and more and more homes always with people still living in them, and, you having to kind of skirt around them. Whereas prior to that, it seemed like, people were having the good sense to, deals happen so fast. It was always under contract the first 4 days on the market. You could just simply take a long vacation, a short vacation, and, get out of town. But then, it did take a little longer to sell in 18 and 19 because of interest rates being higher and stuff. And so you're seeing people, more in their home. And now, God, most of the homes are either vacant, or you can tell that, nobody has been around for a couple of days in them. And so now that everyone's back in school, I think we're going to see a shift again to more occupied homes, and you having to be more difficult with juggling schedules for sure.
Yeah, you bet. There's a couple of interesting things here. These come from the Colorado Association of Realtors, where they take a look at the whole statewide market, and just new listing traffic is actually up going into July, which normally we don't necessarily see this increase year over year all the time in our listing traffic. It starts to kind of plateau around July generally, And then the sold numbers, this is just unreal. This is single family detached units, 21% more than July of 2019. I mean, that number is incredible. Like we talked about earlier, over 10,000.
Yeah,
And that really year to date only brings us short of where we were last year by 2.8%,
yeah.
less than a thousand sales. So what Jim was saying about going into the third quarter and just having a really strong market going forward, I would not see any hesitation with that 2.8% for us making that up over the next couple of months.
Well, and too, Anthony, if you like, just take your mouse over to the beginning of the green bars for like sold or pending, uh, on the left side where it's like 2019, that's June of 2019 is the first bar. The second bar is
Right.
July of 2019. You can see, that is a stable, the bar difference between the two is very stable. And that's typically what we see is kind of a stability between those 2 months in the pendings and the solds. But to see just this massive leap is very unusual, and the amount of difference just in June and July and for pendings and May compared to the previous year, it's such a quick recovery ramp that it certainly is defying expectations in a very good way, and it just illustrates the point that we've got a lot of wind in the sails of this market.
Absolutely. And you're going to continue to see that appreciation level too, because look at this, 22,000 nearly last year on active inventory statewide, not even 13,000, 42% decrease in inventory and detached. The one thing that, we've seen a lot of is people kind of migrating into the suburbs during this time. They're really valuing their space a little bit more. So you can go over here and look at this, but this doesn't mean that detached units are not doing well, because you can really see just 15% up and sold still, right? They're trending very similar to attached units, maybe
Hmm.
not quite as strong. And there's 25% less inventory in attached units also. So what this really tells us is not only are people valuing their space, but they're really valuing their home ownership, whether they went from renting to buying an attached unit or they went from an attached unit to a detached unit. You're actually just seeing a lot of market activity across the entire board.
Yeah. Well, and even like, if you think about if you are, doing okay right now, but you might be expecting to lose your job going forward, there's a case to be made that you've got a lot more federal protections as to your housing situation with forbearance versus, the fact that the eviction moratoriums have all been lifted as well. So I can't imagine
Absolutely.
anybody not wanting to try to get into a house at this point in time, even if their situation isn't as stable as they might like.
Yeah, for sure. One more time, we wanted to give a quick shameless plug. I'm Anthony with Land Title, and you can always catch me on my cell phone at 303-968-9868. Always here as your market expert.
And I'm Jim Merrion, Realtor here in Boulder, Colorado. Phone number 303-548-0243. And feel free to shoot me an email at jim@ourcoloradohomes.com. Or if you'd like to reach Anthony and I together, you could email us at frontrangefacts@gmail.com.
Now we're going to move over into more of our local markets. So let's start at the largest market in the Front Range, and let's look at the Denver metro area. Yeah, there's some pretty good takeaways here. A lot of everything is kind of seamlessly following the majority of everything we've already talked about. I mean, July just towering over everything else. Those number of solds and actives coming to a pending of over 7,000 in the metro area, 17% increase from July of last year, right? Everything is doing very well in the metro area. Supply lines are tight. Homes on the market are at a 5-year low, 36% less than a year ago. Some of these are a little less dramatic than maybe the state level, but the other thing that I think was really interesting to take away was just that the average offer coming in right now is at 100.4% of list price, right? It's well over asking price. So it's a good thing to know if you're out there shopping or if you're even thinking about listing a home. That's not something we typically see in July. So that is a really positive sign if people are trying to list property. And if you're a buyer beware in that case, right? Definitely be prepared when you're going into making offers.
And I think it's important to note that, obviously with the statewide data seeing an 8.6% increase year over year in sales price is strong, but, you better really be ready to fight in Denver Metro because it's at 9.5% above, where it was a year ago. So a $51,000 difference in price on this, same home year over year in the average sale price home.
Yeah,
That's
congratulations if you bought a year ago. You just made 50 grand.
yeah, that's not a bad place to be, and
Pretty sweet.
Colorado remains at the top of the list for real estate. It's always a good idea, no matter the market. You can't time markets, so just know that Colorado remains strong regardless of everything else. So,
Absolutely.
the breakdown by county, Anthony, do you want to go into that at all with where activity is on the other slide, or
We
Nevada?
can a little bit. I think the most important part is keep in mind that, definitely the counties are doing different based off of location. As far as active listings are concerned, Elbert County's down almost 60%. You have Douglas and Broomfield also dramatically down. I think they're more towards the outskirts, right? And then when you look at something like Adams or Denver, the active listings are actually not really down at all. So
Yeah,
there is definitely some shift there in the metro area. It's definitely something to pay attention to if you're working in that marketplace, you're looking in the marketplace, because those inventory levels are really what's driving the price changes. And not just the price changes, but just the volatility as far as getting out there and getting something under contract can be much more difficult where there's a lot less activity or there's a lot less listing traffic.
yeah,
The one thing that maybe this will help kind of paint the picture a little bit better. Every time we look at that active inventory line and it actually drops below the number of under contracts and solds, it's an interesting seller's market, right? A little too extreme for comfort. So it's just pretty amazing to see just the active inventory down 37% over a year ago. Those sold numbers are up 22% from a year ago and 15% more than they were a month ago. We're just setting records all over the board. I mean, those pending numbers are record highs, right? You just don't see those kind of pending numbers in a normal environment.
yeah,
Normally it's very seasonal, and we're just not seeing the seasonal kind of norm because of COVID and the shutdown and showings and just everything that's kind of gone into all this. So wanted to point that out. It's kind of interesting to see.
oh, for sure.
Um, when you look at month supply of inventory, when I was just saying this is an uncomfortable market for most people that are buying and selling, that number right there that shows 1.19 months supply of inventory, it is a really, really strong seller's market. And this is the kind of environment where you're seeing multiple offers. You're seeing it be very difficult. Buyers are looking and making a lot of offers and getting frustrated. But what this means is this just means that there's a ton of demand in the marketplace and there's just not enough houses on the market.
Yeah.
37% decrease from a year ago. It's crazy.
Well, and and then when you get even more granular to specific towns, I mean, Westminster and Thornton are about 2 weeks of inventory right now. They're very much a more of a budget conscious kind of price point, right? And they've got a lot of that kind of starter price point in them, and that's where there's certainly a massive feeding frenzy going on with anything that's affordable right now, and yeah, expect to be in a battle if you're looking in those towns and some other
Yeah.
larger ones.
And it's definitely worth noting. Look at Elbert County. Elbert County has less than 2.2 months supply of inventory. Now, granted, Elbert County is a much smaller county, but when you say people are valuing their space, that's
Yeah.
exactly what's going on there.
And
That,
to see like a 60% drop in listings too for that county, that's
yeah,
kind of what doesn't help, with that
people are
either.
hanging on if they've got them and they want in the door, right? So
Mm.
it is interesting to see just the shift, right? Jefferson County is a really good example too. Less than a month of inventory, kind of the same situation. You're a little bit more spread out, and it's pretty interesting to see what's going on in this marketplace. The other one is the days on in the MLS, and this one really measures our buyer demand, and we're looking at 24 and a half days in the MLS. Year over year, this is only about 7.5% down, but that's two full days in a market where it's only taking houses 24 days to go under contract as a whole. Like this is everything, right?
Yeah.
It's just pretty amazing to see that that's kind of the behavior we're seeing right now. And when you're looking at, every year this continues to rise through the end of the season. I mean, seasonally, you see these numbers creep up all the way into January from here. So the fact that those numbers are still bouncing around the seasonal lows is just pretty incredible.
Hmm. Absolutely.
The other thing, we talked about just the record number of sales, but this really shows just how much higher sales are right now than in normal years, but just not only in normal Julys, but across the board. I mean, we really are making up for all of those April and May sales. 6,600 sales in July, 21% over a year ago or so, and 15% over last month. So recovery is definitely strong in the metro area, just like everywhere else. So
Well, as we were talking, I mean, like the Boulder Coldwell Banker office had its, largest record of sales in, July of this year, beat any other month ever. And, what were you saying about land title? I mean, didn't they do something similar?
yeah, absolutely. It's the best month we've ever had at land title in Boulder. And,
Uh,
you know, it is pretty great to see the recovery taking place like this because, when we were looking at things in March, you never knew what was coming, right? It felt pretty gloom and doom. So everybody's really happy to be just, kind of catching up from a lot of that lost inventory,
yeah,
the lost deals, right?
no, absolutely.
This one is always interesting to see, and the reason I like to show these is this breaks it down by price point quite a bit, and you can really see in here just how incredible the number of solds are in the marketplace, right? There are far more solds in July in almost all price points than there was inventory, all the way up to about 800,000. So anything under 800,000, it's going to be competitive. And then look at that price band, even 800 to a million. Three-quarters of all the inventory on the market sold last month.
Yeah.
So there's demand across all price points. 20, 30 plus million homes sold last month. That's
And
pretty good as well, right?
just
Even up in the luxury.
to even see the top end, because the top end had, certainly been struggling with, COVID changes like making jumbo loans harder, and then a lot of people early on taking a bath on their stock portfolios. It's remarkable to see a year over year change of 233% for that $3+ million property, and just even very, scratching almost 100% increase in that 2 million to 2.9 million. It's nuts.
Yeah, it's incredible. So that is promising to see. In the last few months, every time we talk about this, luxury has been struggling. So luxury has rebounded equally as well as the lower end of the market, which is pretty cool to see.
Yeah.
This is the one that we were talking a little bit about, just the struggle in some of these price points with the month supply of inventory. When people are out there looking and there's less than 2 weeks supply of inventory in a lot of cases, anything under that 500,000 600,000 range, it's just so ultra competitive. You just got to be prepared for it, and you can really see that across those price bands in the month supply of inventory. 1 month or less, and everything under 600,000 pretty much. And the days in the MLS are at 16 if you're at 2 to 400,000. So be prepared for a battle if you're trying to buy a house. And if you're trying to sell and you have some other stuff sitting in that inventory level and you don't know if this is a good time to sell, data definitely suggests that you're going to get top dollar right now.
Yeah. Absolutely. You're going to get that 100.4% of your price.
Absolutely.
So, Anthony, let's just give us another little plug about ourselves. Why don't we?
Absolutely. I'm Anthony Meisner with Land Title, and I'm here in the Boulder market. I'm your local stats expert. My cell phone number is 303-968-9868.
And I'm Jim Merrion, realtor here in Boulder, Colorado, 303-548-0243. If you want to hit me up on my cell phone, and you can always email me at jim@ourcoloradohomes.com, or you can email both Anthony and I at frontrangefacts@gmail.com.
Perfect. Let's head down into a little bit more granular from there. We're going to go all the way up to our northern border friends in Larimer County. And Larimer County has had some incredible behavior as well. Just like everywhere else in the county, solds for single family are through the roof, 31% increase there, 731 sales. Ever since we've been doing the show, that is definitely a high.
Yeah.
And if you look year to date, this is the incredible number. Larimer County has caught up year to date for sales in single family homes and in townhouses and condos. So those sold numbers are above where they were a year ago already in Larimer County, which is fantastic to see.
And just to, remind everybody from the statewide, we're still down about like 2.6% or something like that statewide from a total sales amount. So Larimer is in full recovery right now, and, exceeding expectations a little bit as well.
Yeah, absolutely. We go over into Weld County. Weld County is definitely sharing some similar aspirations. They're not quite caught up yet, but still outperforming the marketplace in their detached units. Only 1.7% down from a year ago. So recovery full in effect out there in the Weld County markets. Their townhouse condo markets are not doing as well, but we have to remember in Weld County, there's not a lot of attached units. There's only 69 homes on the market, or I guess 69 homes sold. Sorry. And so, you kind of look at that year to date, they're down 30 sales. Nothing too concerning, absolutely, at this point,
You
even
know,
though it is an 8% drop.
well, but they saw a huge leap in new listings for July as far as the townhome and condo market goes. By having a 60% jump from that time last year. So hopefully with that increase in inventory, it'll help some people come off the fence and start to buy.
Absolutely. A little bit of breathing room never hurt. If you wanted to pop over into the Boulder market, we just wanted to show this slide specifically because if you looked in the metro area, June was the peak of the under contracts. And if you look over into Boulder, Boulder continued to just climb at these record paces all the way through July. So not only are they at a record number of sales, but they're also at a record number of under contracts for July ever.
Yeah. I
Awesome
mean,
stuff. Really excited to see that.
just the idea of having a 47% increase in under contracts from July of this year compared to July of last year, it really defies imagination. It's such an incredible leap that I think it just that number more than anything else we've shown today just illustrates what a delayed market COVID brought upon everybody in Colorado. It's just it pushed off all the spring buyers into the most massive summer month we've ever had.
Yeah, absolutely. It's pretty impressive. The other thing that we really wanted to point out here in the Boulder County markets was just the fact that the luxury market is doing really well as well, right? If you look at month supply of inventory, that 2.5 to 3 million range is down almost 30%. There are a lot of active buyers in across all market ranges. If you look days on market, the one home that sold over 3 million last month in Boulder County, it sold in one day. So people are looking from any price point all the way down through any range, right? And if you look at it, the average days on market, the only one that had an increase was the 1.5 to 2 million range. And I think that's fairly an anomaly because I think you had some homes that actually sold with really, really high days on market. And the majority of things are just, it doesn't really seem to matter what range you're in. If you have a home that's for sale and you're looking to sell something even in the luxury price ranges, you can see that buyers are just as active from 3 million down to the 300,000 range. It is kind of shocking just to see that. And then just this number here, if you look at actives and solds, the active numbers, the biggest hits that you see across all of these markets, and especially in Boulder County, you're seeing it under 800,000, somewhere between 25 and 35% decrease in inventory levels. And then you have these record numbers of sales taking place, but it's really limiting the number of sales that can take place because people are shopping. They're struggling to get stuff under contract because there's just not enough inventory out there.
Yeah, it's one of those situations where you got to go out, plan on being on call essentially whenever something hits the market because unlike in years past where we had a feeding frenzy, but we still collected offers for like Thursday through Sunday and then made an offer decision on Mondays. Now it really is kind of whoever brings a really strong offer quickly is probably in the driver's seat for that particular transaction.
Yeah, for sure. We're going to move over into El Paso County, go visit our friends down in Colorado Springs. And this market is interesting too. So this one's delayed a little bit more than the rest of the state from what we've talked about. They're down about 3.5% in solds. That's a little bit more than the state average, but they still are up 16% from July last year versus this year. And then if you look at their month supply of inventory, and I really truly think this is why they haven't had as many sales as fast, there is just nothing on the market. 1.1 month supply of inventory in single family, that's down 40%. And in townhouse condo, less than a month of inventory, which is a 30% decrease from a year ago. And we've been saying this for months and months, and even over the years, just how astonishing it is the inventory levels can stay that low down there when they're building as much as they are. But it has to be driven by price point. I mean, if you look at those average sale prices for condo townhouses, 15.5% increase from July last year.
Well, and Anthony, I'm almost positive that when El Paso ended last year, 2019, them and like the Fort Collins area, I think were like the top two gainers in price, and some about 9.5% price increase last year. And now, we're looking at, essentially a little bit more than that, pushing 10%, year over year on the, townhome condo and over 10% on the median sale price for a single family. So what a fantastic investment to, have bought in El Paso a few years ago and to see your price point increase. But, that value that El Paso represented in the past is now starting to get away from, a lot of people as well.
Absolutely. It's going to be one of those markets that appreciated right around everybody, and it's going to be much more in line with the Front Range than it has been in the past.
Absolutely.
Well, thank you so much for joining us today. Hope you enjoyed the show. As always, we just want to remind you can get a hold of us if you have any questions or want to get a hold of the show. FrontRangeFacts@gmail.com is where you can find us together as the show. We're happy to share information with you if you need any more information on the marketplace. I'm Anthony Meisner with Land Title. You can always catch me on my cell phone at 303-968-9868 or at my email, ameisner@ltgc.com.
And thank you very much again. My name is Jim Merrion, Realtor here at Coldwell Banker. My phone number is 303-548-0243, or feel free to email me at jim@ourcoloradohomes.com. We look forward to seeing you guys next month. Thank you.
Have a great day.